All right, let's move on and invite the next management on the show. That's Titagarh Rail Systems. Significant gains coming in on the stock. Strong Q4 margins for the company have expanded. Profit has seen a very strong growth. And it's the freight segment which has seen strong execution. Umesh Chaudhary, Vice Chairman, MD of Titagarh Rail Systems, is with us now to talk about the way forward. Umesh, morning, and thank you for joining in. First, if you could just give us some numbers. What's the order book and the split between passenger and freight segment? And when does passenger freight, passenger execution pick up?
The total order book we have as a company is about 28,000 crores, which includes our share of our joint ventures or consortium bids where we have won tenders, out of which it is approximately half and half, which is in the consortium stroke joint venture. Of course, when I'm talking about that, half is our share of the consortium, not the complete order in the consortium. And further drilling down the passenger and the freight in the 14,000 crore of direct orders that we have is again split half and half. So that's the overall order book. And as far as the execution is concerned, we completed Pune Metro. Almost all the trains are now supplied, and they are running well on the Pune tracks. And we are starting the Bangalore Metro execution from Q1 end or Q2 beginning of this financial year. So this is the intervening period, because we had the first contract of Pune, and then we were setting up the stainless steel line, where there were some delays on account of the visa issues for the Chinese engineers. A lot of equipments actually came in from China, and that kind of delayed the project by a couple of months. But now we are on track, and we'll be starting production in the matter of next few days itself.
So what are the targeted revenue bookings at the end of this year?
So this year is going to be, of course, much better than the previous year, but not going to be the optimum, because, as I've always said, that the passenger business is a kind of a nascent state, is at a nascent stage. We will have the Surat and Ahmedabad kick in this year. Vande Bharat will start from the next financial year. So the real potential of the passenger coach will be seen in FY 26-27. So in both FY 26, we will have a substantial jump, and FY 27, there will be a further substantial jump of order execution that we have on hand.
Okay, 26 onwards, basically. Mr. Chaudhary, what is your ideal PV versus freight business mix?
The passenger business actually has a greater potential. So, if I really look at it, maybe 5 years down the line, I would say that passenger business should be probably 60-65% of our revenue.
Do you have any fresh orders in the passenger segment?
There are a number of tenders that are in the pipeline. There are several metro tenders, and then there will be additional Vande Bharat tenders. We've heard the Honorable Railway Minister speak about waiting list free railway system, and 3,500 new Vande Bharats being added over the next 5-7 years. So there is a huge, I would say, traction in this segment. So many metros, there is the Mumbai Metro, the 3 lines which are getting ready. Then there is Chennai, there are 2 lines. There is additional Delhi. So there will be a number of metro tenders that will be coming up that are already in public domain, and that will come up in the coming months and years. So we don't see that order booking will be a challenge. The way we are structuring ourselves is we are creating a capacity to produce approximately 400 cars of metro per year and 400 cars of Vande Bharat per year. And we believe in the first phase. So we believe that there should be enough business in the market to be able to take up this capacity.
What's the target on monthly production in the freight segment?
So we, on an average, we did 900 wagons in the last quarter. We did 2,700 wagons. Of course, in March, we did more than 1,000 wagons. This year, our target is to get to about 1,000 wagons on an average. So let's say between 950 to 1,000 wagons on an average. And we believe that that is, considering the overall market demand, that is the right sizing for us for the wagon. And then we will see the new freight corridors that have been announced by the government. As in when they come up, the demand goes up. Currently, we believe that the demand is about 30,000, 35,000 wagons a year. For that to produce about 10.5, 12,000 wagons by us is a fair market kind of share. And if we see on an overall basis, what we did last year was approximately 8,400 wagons, which is an average of 700 wagons. So from there, we would like to get to 950 to 1,000 wagons on an average this year.
Got that. Mr. Chaudhary, could you tell us what margins are you aiming for in both segments?
So I've always maintained that as far as the freight is concerned, the fair margin, I used to earlier guide at about 10%, but because of the operating leverage, I would say 11.5, 12% is a fair margin for the freight business. They can vary from quarter to quarter based on how much private wagons we execute, how much railway wagon we execute, which type of wagon we execute. But on a blended basis over a few quarters, I would say 12% is 11.5 to 12% is a fair number to estimate for the EBITDA margins for the freight business. As far as passenger business is concerned, this is very important to understand because the margin improvement in this will happen on stages, in phases. So right now, of course, we don't have in fact, we have a disadvantage of operating leverage because we have created a large fixed cost. We just opened an engineering center in Bangalore this month itself. We have a joint venture engineering center in Hyderabad. We have a large engineering center in Calcutta. And all of this is going into the cost. We have very large setups that we have created, which is primarily going to get the benefit of that is going to come in quarters to come, wherein we are able to scale up our operations. So we believe that when we are doing the passenger rolling stock, when we get to a base level of at least 15 to 20 coaches, which should be achievable by Q3 of this year or Q4 of this year, we should be able to do 10% EBITDA margins approximately. And when we are integrated with propulsion, which should happen in FY 26, then our EBITDA margin should see an improvement and we should be targeting between 13 to 15% EBITDA margins.
So with all that you're aware of, revenue and margins, what could they be in terms of, FY 25, FY 26? What are we looking at in terms of annual growth?
So we don't give any kind of guidances. We don't give any forward-looking numbers. But, we have a large order book. We have a healthy order book, which we have to execute. We are ramping up on capacity. We have delivered, if you see, from 2,800 crore in FY 23, we have done 3,850 crore in FY 24. Our EBITDA is almost 450 crores in FY 24, which is quite substantially higher from FY 23. And that trend continues over the last 5-6 years. So if you look at the company in FY 18, 19, around 18 or 19, we were at a top line of 300 crore. Now we are at a PAT of 300 crore.
Thank you, Mr. Chaudhary, for joining in. So that's Titagarh Rail.